Welcome to Common Sense Investing. My name is Cameron and I am a microcap stock investor. And today I'm here to introduce to you another microcap stock that's made it onto my watch list. This is Acorn Energy, developing remote monitoring and control products through the power of IoT, Internet of Things, leveraging technology to protect your critical assets. Acorn Energy is a holding company. They actually own 99% of OmniMetrics. OmniMetrics is the company which provides remote monitoring and control products and services for generators, gas pipelines, air compressors, recurring Internet of Things monitoring revenue with high margins and hardware sales targeting a 20% growth rate. To help explain, here's two examples where they have standby generator and compressor monitoring. This is the hardware device that they sell. Once they sell these hardware devices, they do get some one-time revenue from that, but then they get the recurring revenue from selling you the software and recurring monitoring of these hardware products. And go check out their website. They have several niche type applications for this, commercial and industrial. They're talking about monitoring for healthcare, air compressors, residential power generation, cathodic protection we've talked about for pipelines, demand response for energy infrastructure. This is from the company's investor deck. It's the pitch. And of course, they're adding a value add to products that you already own, improving maintenance results, reducing critical asset downtime. They are saying that just purchasing their service like the generator monitoring prevents 95% of failed to start events by tracking vitals of your generator. While the company is saying that using their products and services is clean and green for the environment, but again, I really like how they always bring it down to costs, reducing travel-related costs, time, and emissions, right? Huge total addressable market in massive industries with lots of money. If this company can continue to grow, continue to gain market share, continue to get noticed and get their story out. So yes, this is an industry niche that I'm fairly bullish on. Taking hardware that is maybe a bit outdated, that needs to be monitored, that you need to go actually look at to inspect on site, and slapping this Internet of Things device onto it. Optional satellite collection of data so these products can be out in the middle of nowhere and you get real-time monitoring of it. I think it is the future, especially for a lot of these old legacy products that are sitting out there, generators, compressors, out on work sites that could benefit from this type of product. So before I look at the numbers, don't forget, I'm not a financial advisor. I'm definitely not your financial advisor. I don't know anything about you, your experience, your risk tolerance, how much capital you're working with, nothing. This is simply how I invest. I like talking about it, and it's not to invest. So please, if you have any concerns, go consult an actual financial advisor. The company obviously agrees with me and is also bullish on this industry sector, of course, right? Saying that there's lots of growth drivers. The company is targeting 20% average annual organic growth, cash sales growth. This is a number that I really like, especially using like the modified CAN-SLIM method. As an investor in microcap stocks, if you're not growing, you die. Here is the company's reason why they want you to invest in them, or their investment summary. I'm not going to read it all. You could pause it here or go check out their website. But I mean, there are some things here that are quite bullish. Zero debt, $2.2 million of cash, as well as 35% insider ownership of the company. People always like management with skin in the game. But where I'll direct you to is, yes, Common Sense Investing does now have a Substack where I am writing articles on companies. I will link to that down below in the pinned comment. This was a paid article since March 17th where I covered Acorn Energy. For the purposes of this video, I will make it a free article for you to go down, check out my Substack, and go read some more information on Acorn. In my article, I compare Acorn Energy to Beware Holdings, which has been very successful share price-wise. And looking at the revenue trends here between Beware Holdings right here in Acorn Energy, Acorn is just a little bit behind Beware. So this year, Acorn Energy in 2024 reported $10.9 million of revenue, previously 8.1 and 7. That's the same as Beware Holdings back in 2020, 2021, and 2022. So they're on the same growth path, because so far both companies have been consistently going up in the past few years, and Acorn Energy has been doing that pretty well without any kind of dilution, with their last dilutive event being back in 2020. The company reported just recently on their 2024 earnings on March 6, 2025. Strong growth, no dilution, and an inflection point to profitability. And even though they've been guiding for 20% growth, on the year, they got a 36.3% revenue increase, gross margins of 72.8%, and then net income per diluted share jumped to $2.51. This is a little bit wrong because they get deferred tax benefits, but still 74 cents after adjusting for those benefits. So an EPS of 74 cents with 36% growth. Wow, that's not bad, right? So what are the risks? Those are a lot of potential rewards. We have a growing company, profitable with high margins. What can possibly go wrong? Every company has some risks. Again, go check out the article down below in the pinned comment. I talk more about these risks and more, but I mean, fantastic. They got this big, large contract here, $5 million. As a small company though, when you get a great large contract, it's fantastic, very, very bullish. But for any reason, if this goes away in the future, it can take some time to recover from that, as well as execution risk. They've actually got a few large customers where they're basically on pilot contracts. We really like the idea of what your company is doing. We want to give you a shot, but that's not necessarily a 100% guarantee that they're going to secure that long-term contract. And then, of course, the company, very small on OTCQB, and maybe that's the largest risk because that's not my favorite exchange. They are talking about uplisting, which can contain some hurdles and some expenses. So definitely still some risks for Acorn Energy. I have my dashboard here that I build with Y-Sheets. You get this for free when you join my paid Patreon. And really what I'm talking about here is when I plug in what the company is telling me, which is 20% growth over the next couple years. And I mean, keep in mind, they got 36%, not 20%, but just using those conservative numbers. What P/E valuation do you think Acorn Energy should be getting in the future? And that can help determine where you think share price can also go in the future. And this stock is really starting to screen quite well. I think investors showing up to the Planet Microcap Showcase April 22nd to the 24th in Las Vegas are going to like this company. And is that another catalyst for share price in the future? My name is Cameron. You've been watching Common Sense Investing. As always, thank you for your time.